today, in our industry, many individuals refer to it as bridge, and I guess bridge doesn't do it justice. So let's talk about that. And just to build the context, perhaps even for the audience who don't know what we're saying is, there is a technology layer that links up the trade that comes through from an end trader, a small retail trader who has access to a specific trading platform, the most popular one being MetaTrader. Then that MetaTrader connects with what's called a bridge into a whole massive other technology stack.
Yes.
Which serves the purpose of matching those orders either internally
Yes.
for the broker who takes on that risk on their own, or matches it onto the exchange. An order comes back, gets a confirmation, goes through. Maybe I haven't done it justice. Let's hear your description of this solution.
The bit that I would say is it's not onto an exchange normally, because the brokers, it's a market of tiers. So you've got the end trader, then you've got the retail broker, and then you'll have the prime of prime broker, and then you'll have the bank or non-bank liquidity providers. So sort of XTX would be a non-bank. The banks one would be all of the traditional, Barclays, NatWest, all of the usual ones that you'd have at the top there. And the exchanges are not providing foreign exchange trading technology to any level that anybody uses. They tried to launch it, the traditional exchanges, not crypto exchanges talking. They tried to launch it for institutional because they wanted that market, but it's never worked. Foreign exchange is just not an exchange trading market, even though it has the word exchange in it, which sounds like it should be. It's actually an OTC product, which means it's invented by the person who's providing that liquidity. So theoretically, someone's liquidity in selling cable GBP against USD is different to someone else's. But because these products are fungible, i.e. it's based on things that are standard. So if I buy a dollar from someone, it's the same dollar as I can sell to someone else. If I buy sterling from someone, it's the same sterling someone else. If I buy a CFD on something, it's not the same CFD on against someone else. The CFDs are non-fungible nearly always, whereas FX products are because they're based on a standard currency. So the way that the flow works is the end trader says, I want to buy, 1 million cable. The reason it's called cable, if any of your listeners are interested, is because the first transatlantic wire that was put under the sea from Cornwall to the States was a cable. And so it was between the UK and the States. And that wire, it was a physical wire that was on the bottom of the seabed. And there's a little hut on Porthcurno Beach where that cable comes up, and you can still go and see it. And it was very slow because it's a lot of capacitance in the wire. And that was used to signal between messages between the UK and the US, and that's why it's called cable.
So is that, when we talk about cable, we're talking about the cross pair of British
sterling
pounds,
against dollar.
Sterling against dollar.
Known as cable because of that reason.
Oh, okay.
Yeah.
And what communication, was that for internet communication or was it telephonic?
This was 100 years ago.
Oh, okay.
So this was telephone. It was Morse code actually.
Morse code.
Except it was probably because you have a thing called capacitance in wire, which basically means it holds on to the charge for a period of time. And the longer it is, the more capacitance you have. So if you wanted to send a blip that just went blip, just like a dot, a one or a naught, when you send it, it might be, I don't know, a quarter of a second long. When it arrives at the other end, it might be 5 seconds long because of the capacitance. So you can only send a message, one piece of information, one bit rather, every few seconds. So it's very, 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 very slow. So that's where they did invent clever ways of making it go better by having little spikes up and down, positive and negative, to counteract the. So that's why cable's called cable. Anyway, so if someone is buying cable, we diverged a bit, didn't we? Then
that was a lovely story. I loved it.
The retail broker will receive the order. Now they will have profiled all of their customers to decide whether they want to trade against their house, which is called B-booking. And actually that term was invented when I was at ODL. The ODL management had 2 books of customers, those that they would send to market, which they called the A book, and those that they didn't, which they called the B book. And that term has now become an industry term, B-booking, which means basically you are warehousing the other side. In institutional markets, it is not used at all. If you talk about B-booking to a bank, they will go, I don't know what you're talking about. If you talk about warehousing, they go, I know exactly what you're talking about.
Thank you for watching. If you like that video and you want to watch the full episode, it's available here. Remember to like, subscribe and share. It helps the channel.